Hello, it's Wayne Belisle again with another profit maximizing moment. And this time I have Tessie with me, who, if you hear barking in the background, she thinks anybody who comes into the office should check in with her first. So I'm just kind of warning you, say hi, come here, say hi. She wants food. All right, good then. Yeah, somebody had the nerve to come in without letting her know. So, Tessie, sit, good girl. That won't work. She's got me trained, not the other way around. Anyways, hello and welcome to this week's Profit Maximizing Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our profit maximizing tips that you can use now to help you make more money. Simple as that. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do that with our profit coaching programs and our tax planning system that saved my clients over $7 million over the last 5 years, all legally. As I say every week, I love my clients, but I'm not in the middle here. Let's go the other way. There we go. Love my clients, but I don't want to share a jail cell with them. In today's video, we're going to talk about making sure that you're selling your profit cows. What do I mean by that? Your products that are actually making more money. But first, support for today's show is brought to you by Profit Maximizing Publishing, which published my book, The 90-Day Profit Reset. It's in the process of helping me publish my second one, which will be out hopefully later this summer, which shows you how to gain your independence from reduced cash flow, shrinking margins, and an evaporating customer base. In this book, you'll find chapter after chapter and idea after idea about how you can turn around your business and reset your profits from red to black in 90 days or less. Even entrepreneurs who are making money could use this. Anyways, before we get going, what are we talking about today? Make sure all your products are cash cows. Look, all business owners know that not all products are created equally. We understand that. Products, when I say products, I mean services, whatever it is you sell. Okay. It's amazing how many business owners don't really know what products make them the most money. All right. They focus on the products that they make very little profit on, often ignoring those that are the real cash cows. Even worse, I have seen business owners who have unintentionally put a product on sale below their cost and spent advertising dollars to sell even more items at a loss. Why? Well, it's very simple. The business owner is either just trusting their gut and they're back of the cocktail napkin calculation from years ago, or they're not calculating their product costs. And this is vitally important in today's world when we have high inflation. It's funny that this would be this week's topics. I set the topic a couple months in advance, actually, because I had a meeting yesterday, and I'm not obviously can't give you the name, but I'm going to share my screen. Let's see if I can remember how. There we go. And select the screen. Let's get, I don't know which one this is, so let's see what this is. Bingo. All right, let's allow this one. All right. This is a little hard to see, maybe. Let's see if I can make it a little bigger. I don't want to do that. Oh, shit. Bear with me a minute. Let me get this up and running. Okay. Anyways, that isn't even the one I wanted to show you, but that's all right. Let's stop sharing for a minute. Sorry. All right. Let's take two. That wasn't who I wanted to show you. Definitely shouldn't have showed the names either, which hopefully I went fast enough nobody saw it. Anyways, let's get this over here. Okay, here's what I wanted. Okay, take two. Sorry about that. That was a faux pas. Let's share the screen. Anyways, I had an appointment yesterday with somebody, and like I said, it's a little hard to see this, but let's see if I can get this to be bigger. There we go. Okay, that should be better. My apologies. I thought I had this set up ahead of time. Anyways, one of the things I do when I'm doing a tax return is I do the financial statement analysis for a company. And I loaded the wrong company, which is all right because I gave you the wrong name. This one doesn't have the name, so slap myself. CPA, not supposed to do that. I know better. But sometimes technology and me aren't friends. Anyways, on this one, when I'm doing with my financial statement, every time I do a tax return, I run it through a financial statement program. And this is an example of one we did yesterday. And it measures 5 things, and it compares it to industry standard and to prior years. this, you've got a lot of nice things. This is a great product, part of what we provide, and it's no cost extra. I mean, it's part of our cost. In other words, it's included in the tax preparation fee or the financial statement fee. Anyways, what we're doing is this actually judges 5 areas: liquidity, profitability, sales, borrowing, and assets. Well, notice green is good. He's in the top 88% in sales. Profitability, he's in the bottom 20%. This is what I've been talking about for the last few weeks, which is it ain't about sales. But the problem is almost every business owner has a sales mentality. They don't understand it's all about profits. We need to make money. If we're not making money, then we have problems. All right. Now, this program dug a little deeper, and when I got to gross profit margin, I could literally see, hopefully you can see this all right, I could see what the problem was. All right. Blue, the green is the industry, the blue is him. So if you look in this last year, his gross profit margin, now what is that? That's sales minus your cost of sales. Cost of goods sold if you're selling a product, cost of sales if you're doing a service. He's running at about 15% after. So that's for every dollar he brings in, he's only keeping 15 cents in order to pay his overhead and hopefully have a profit, which he did not. The industry average was closer to a little over 38%, and that's been pretty close. So he's way off. So truthfully, it was very easy for me to sit down and say, your problem is in your gross profits. And that's why we do these kind of analysis, because it puts it in information that the client can understand and see. All right. Let's stop sharing the screen. But I just wanted to tell you, this is what I see all the time. I mean, it sounds simplistic when I tell you, make sure you're selling cash cows. And everybody's like, yeah, of course. Well, if it's of course, how often, why is it that I'm always seeing charts like that where the sales are good and the profit is not? Okay. In truth, it really comes down to people don't know. And in today's world, that's going to put you out of business. And one of the problems I'm running into is that companies don't realize it's happening, because in this particular case, he had a loss. Didn't even know he had a loss, which tells you he didn't even look at his books, which is normal. Okay. And too many CPAs and we're just preparing the tax returns. They're not doing the kind of work that I just showed you. All right. Simple as that. And that's on us. I did it for years. So it's on us. We're starting to go now, and at least, even if we're not doing coaching, we're giving them that information and saying, hey, here's some things you need to look at. Okay. So, I mean, that's on us. But at the end of the day, they need to look at your numbers. And inflation is killing you. And right now, if you're not staying ahead of inflation, or at least not knowing your cost figures, how do you know? Okay. One of the I don't remember who said it. I want to say it was, I wish I could remember his name. My mind is blank. Was an ex-CEO of, I want to say, Microsoft. He said during tough times, bad companies go out of business, good companies survive, and great companies improve. It's part of the reason why we're doing the books, part of the reason we're going to do the coaching later this summer, part of the reason we're going to get the next book out. That's part of the reason I do these weekly, is to help you be one of those companies that improves no matter what's going on. Now, in his particular case, if you don't know your numbers, how can you stay on top of them? And it's very common. And one of the problems I'm seeing is that sometimes these weaknesses are being covered up because they got PPP loans, they got employee retention credits, they got EIDL loans. So they have the cash, but they're losing money. I've seen that more often than not. Okay. So what do? Well, the first thing you do is, as a starting point, you have to calculate the gross profit for each of your products or services. All right. First, calculate the gross profit by doing this. Get a spreadsheet. You have the sales price for each product minus the purchase price of the product less the cost of direct labor for each product. This may be best calculated using a standard rate times the standard number of hours to produce a product or service. So, if you're not doing job costing and actually putting the hours to a job, then you should say, I'm producing a piece of furniture. Hopefully you're not doing that. I'm a flower shop. And, to put this arrangement together, it should take an hour. It should take a half hour. It should take 15 minutes, whatever it is by product. Okay. And we'll do that times the average cost, because not everybody's the same. That's one way to do it. We're trying to get information. We're not trying to be perfect. Less any outsourced work we do, like using my flower shop, drivers, they pay a driver. Less any cost of other direct costs related to preparing the product for delivery or sale, freight, packaging, supplies, etc. And that gets me my gross profit by product. Okay. Now, one of the things is that's a lot of work. Yeah, it is. Okay. I had a client that said it's too much work. They were a restaurant. I sent them back. They said, I can't do that. I said, okay, take your top 20%, top 20 selling items on your menu and do it for that. And they went back. I set up the spreadsheet. They went back, came back, and they sent me the spreadsheet. They had done every single item on their menu. And I went, why? And they said, well, because once we got going, we realized we didn't know, we weren't setting prices. We didn't know which ones were making us money. And we had some we were pushing that we weren't making a lot of money on, and some that we weren't pushing at all that were real profit goers. So, I mean, yes, it's a lot of work, but it's well worth it. Okay. Another thing to keep in mind is activity-based costing. If you've already calculated your gross profit per product, congratulations. That puts you in the top 10, 5 to 10% of business owners who manage their profit in this detail. Now, the bad news, you're just starting. I have seen business owners make costly mistakes because they did not know the initial cost incurred throughout the sale from the very beginning, taking the order to collecting the invoice. We'll call it ABC, activity-based costing. I had the owner of a commercial glass company. I covered this one last week or the week before. The week before that, they're all running together. But I did it in the last 2-3 weeks. Who called me because his sales had increased by 50%, but his profits had dropped by 25%. When I did an activity-based costing on his major products, I found that he had put a new type of glass on sale that was taking his staff 3 times longer to install. When we added the installation time to the product cost, we found that he was losing 10% on each sale with his current pricing. Worse, he put it on sale, 10% off. So he was losing money, put it on sale, sold more of them, and lost more, of course. This meant that he was losing 20%, and he was selling quite well. All right. So what you need to do is make sure that activity-based costing takes your gross profit, subtracts your sales price, your sales cost from that, and then you continue from there. Look, the first thing you need to know is you need to know your product cost. If you don't know them, then how do you know if you're making money? It's simple as that. If I almost always, I mean, I got this fancy program now that shows that I can show people, but I always knew. Sit down and look at somebody who's got nice sales, but they're not making any money. It's going to be in gross profit. Why? Because 50 to 70 cents on every dollar they bring in is going to go to labor and material that they use for what they sell. All right, so that's where we need to look to make money. In the back of the book, I told you this before. I think I still have this thing on there. Ridiculous. I don't think I've raised the price. Appendix 6 is 55 ways to increase profit margins. That's my coaching program. That's my coaching checklist that I use to try to remember all the different ways. So heck, I think you can pick the book up for less than $20. I think I still have it on sale for like $5. Whatever. Do your homework. Get out there. This is a dangerous time we're living through, and business owners, if you want to survive and improve, you need to do the work. Hey, until next time, this is Wayne Bilal saying, let's make this our most profitable year ever. Thank you very much. And Tessie did well. She didn't park. Take